Good evening, I'm Elizabeth Cook.
And I'm Ken Bastida, and we begin with the uncertain future of some East Bay students. KPIX5's Emily Turner is live in Oakland right now with reaction to the proposal to shutter a middle school and cut millions of dollars in funding. Emily?
Budget problems could force cuts to students' programs and teachers' jobs in Granby. 22 News reporter Haley Crumbleholm joins us live with what services could be at risk.
Well, a large number of Rochester teachers are expected to accept an early retirement package from the district.
A bombshell announcement from Spokane Public Schools today. Hundreds of teachers and staff will be out of a job by the end of the school year.
Jobs within the Davenport School District could be on the chopping block. School board members discussed the possibility during tonight's meeting. There's already a hiring freeze in effect for some positions. Now,
Yo, it's like an alcoholic selling a fucking kidney to pay for their drinking habits. Bet you can't do it again, asshole. Now, if you've been around for a little while, you know that I feel some sort of kind of way about the pension crisis that's going on. And for those of you that are new, I'm going to break down what's going on. It's very simple. They stood here and started pensions for public employees, you know, whether it be police, firefighters, teachers. Teachers are by far the largest majority of what we're talking about here. So when we talk about teachers' pensions, understand I'm not ragging on teachers, but they're just the largest portion of this. And I feel bad for them. It's kind of like if you go and feed ducks at the river or at a pond and the ducks stay there in the wintertime and they end up sitting here starving, right? You know what I mean? Because you don't go out in the winter to feed them. It's not the ducks' fault. It's yours. All right. So it's the politicians' fault who promised all these individuals things that they couldn't, you know what I mean, back up. And it didn't matter what we did, like this was going to be a problem. Now, we're at the level of where a lot of states are 20 and 30% funded, right? And it might be worse than that, like because they don't report numbers, and we're about 3 years behind on the numbers, which I'll break down here in a little bit and show you a little more about. And this is an issue that, you know, nobody really is talking about. But it's a major problem because it's like somewhere between $5 and $10 trillion that's due that we don't have. All right. And it's a lot. It's a state by state program. So we're talking about bailing out states, you know, because legitimately what's going on is that I thought they were going to end up coming down like it's 1 or 2 points, right? Where either A, the bonds that they put out wouldn't get paid, or B, they wouldn't stand here and, you know what I mean, pay the pensioners. Well, apparently they're going to choose to like start firing teachers first and stop educating individuals because, yeah, that's going to fucking help. Like, yo, so what you're saying is individuals who are paying into the pension fund is the problem. That's going to help you if you get rid of them. Yeah, you're fucking retarded. That's where I'm at. Like, I get we should make schools run more efficiently, but, you know, yeah, the whole thing's a fucking giant nightmare of a mess. Legitimately, it really, really is. So let's look at this Wall Street Journal article, or this Bloomberg article right here that they wrote, and I mean, back in January about this, and it'll break down a little more as to where we are. Bloomberg wrote this article. The pension fund problem just got much worse. A simple extrapolation of the recent trend lines suggests a crisis around 2023 that assets are wiped out even if returns rebound. So they went through, they said a 14% drop in the S&P 500 index last quarter has big implications for state and local pension funds, which probably saw the value of their assets fall by about 7%. Investors with the benefit of a long-term horizon have the ability to ignore market dips, and pension funds are among the longest-term investors, but their problems are not long-term, and further short-term declines could precipitate a crisis. The table below shows, shows pension fund assets and liabilities as compiled by Pew Charitable Trust. There's a large and growing gap, but not the primary problem. Although the value of these assets is known with reasonable accuracy, The liability figure is based on assumptions about the future. The actuarial and political assumptions are uncertain. But it is the investment assumptions. Plans assume that an average discount rate of 7% that are most problematic. Right? So these are the assets and these are the liabilities, right? With the orange line here. Okay. And we can expand this out and show you what it really looks like, right? These are the assets and this is trillions of dollars, right? So this is $4 trillion is how much is fucking owed. And they end up going down to the point where they're at about 2.5 in 26. That's just 2016, right? And right now we are sitting at right around $7 trillion of unfunded liabilities right now in the United States pensions over the next 50 years. But the problem is, right, we're not going to make it through the next 50 years, right? First, the cumulative returns are lower than average. A return of 7% grows to 100. Yeah, this is all just crazy math nonsense. So we're going to skip this at the second just because it's not super important, right? Second is the extended period of bad returns cannot be made up even with astronomical returns later. Suppose a fund has 50 years of level monthly payments and assets to support them, assuming a 7% return. If the fund earns 0 over the first 15 years, one might think that the fund needs to average 10% over the final 35 years to meet its obligations. And in fact, the fund is broke in less than 15 years, and it doesn't matter what returns are afterwards. Due to those two effects, if a fund, it's basically like saying this, all right? So you don't gain any money if you continue to pull assets off the top. It's kind of like if you stand here and earn, say, like you have, you buy a $1 stock and it turns into $10, right? You know, I mean, you bought 100 shares of that. So, you know, I mean, all of a sudden now you have $1,000, but you take 800 off the top and you're down to 200 again. So the next year when it earns like a 7%, it doesn't fucking matter. You know what I mean? Because like you still need $1,000 to begin with in order to really earn any fucking money. That's kind of what they're saying here. So the fund's final 13 years of obligations went unpaid, even though the average return was almost 1% above normal assumptions. Even if pension funds were fully funded according to assumptions, there is no chance existing assets are enough to pay already contracted liabilities. But worrying about the next 5 decades is pointless because there's also no chance the current system will survive long enough to discover what the next 50-year average of returns will be. Once its total assets start to decline as they did in 2016, the last year for which we have aggregated national data, you can get a death spiral with ever-shrinking base of assets failing to produce the needed income, leading to asset sales and further declines in income. Now, nowhere near the tipping point on an aggregate national level, but aggregate national flows will not trigger a crisis. For instance, New Jersey added $27 billion in liabilities in 2016 and lost $6 billion in assets because contributions and investment earnings couldn't even cover benefit payments, much less build the fund to pay for additional benefits earned. The chart below shows the assets and liabilities for New Jersey and the pension and local pension funds, right? This is in billions of dollars. So we're up here around $200 billion or $250 billion, but they only have $75 billion in fucking assets in 2016. Get what we're saying right now? You know what I mean? Like, yo, things are rough in a lot of places. So there's a bunch of these all over the country. A simple extrapolation of these lines suggests a crisis around 2023 when pension fund assets are wiped out. That's an extrapolation, not a prediction. Market returns and political action could move the date a few years in either directions. Moreover, action will be forced before assets go to zero. We don't know when or how this will happen, but it won't depend on the average investment returns over the next few decades. This brings us back to the recent decline in stock market. The commentary uses the 2016 pension fund data. Most pension funds use a June 30th fiscal year, so fourth quarter calendar 2018 results were reported late in 2019 or 2020. The two major aggregators of the thousands of fund reports will be published in 2021. If stocks continue down to the point that a major state passes the tipping point to crisis, the crisis will be well advanced before we see it in the aggregate pension fund financial reports. So they're not even gonna tell you that it's happening. You won't know until 2 years afterwards, or even 3. You know what I mean? Because we're not gonna get 2018 fucking numbers till mid 2021. And this is half the fucking problem, is the fact that we're 3 years behind on knowing anything about any of this fucking data. The only data we have right now, and it just literally came out in January 2019, is the 2016 fucking data. we know shit is much worse than that at the moment, right? And this is why I'm bringing you this fucking information, right? The state and local pension crisis has passed from a long-term actuary crisis to a medium-term cash flow crisis. Forget about liability projections and aggregated national numbers. Look at the least responsible big states and focus on asset values, inflows, and outflow. That's where the disaster will force a new regime. All right, and this is from the actual, because this is an article about the Pew Research thing that actually aggregated all the data together. These are my estimates based on stock, bond, and inflation returns supported by Yale University professor Robert Schiller. Earning 10% for 70% of the period, about 35 of the 50 years, averages 7% per year. Getting the 1950s, 80s, and 90s bull markets and ending at the height of the dot-com bubble, increased funding is still a good idea. The earlier the problem is addressed, the less painful the adjustments. But full funding according to existing accounting will not prevent an eventual crisis. The general picture is similar, although not as extreme for states such as Illinois, California, Connecticut, Kentucky, and Colorado. We've already seen a financial disasters in Detroit and Puerto Rico and numerous smaller places, but in these cases, pension funding underfunding was part of a larger fiscal and governance problems. These events will certainly continue, but will not force a major national policy realignment. The Pew Charitable Trust cited above in the U.S. Department of Census Annual Survey of Public Pensions. So here's what happened, all right? Because a lot of people stand here and go, oh man, they robbed the pension funds. All right, am I going to say there wasn't corruption? No. Am I going to say that they didn't steal from these funds in a couple of places to pay for other shit that they couldn't pay for because they couldn't raise any taxes because people wouldn't tolerate it? They would end up like lining up with pitchforks outside of their local state house. No. All right, that did happen legitimately. You know what I'm saying? But here's the real problem. They stood there and they said, look, man, all right, we're going to never, like, yo, this good time's going to continue on forever. You know what I mean? And it's kind of like, it's like running an electric generator off of rainwater. It's great when it's raining outside, but when the sun's shining, you're kind of fucked. That's kind of the deal at the moment. So that's where we are. All right. They expected 12% returns forever. And the moment you start getting, you know what I mean, 5, 4, 3% returns year over year, when, you know, I mean, we're in down years and we're having problems with the bond market because interest rates are ridiculously low, and, you know, I mean, they're standing here trying to pay for these things, and you have a lot of people who are living 30, 40, 50 years into fucking retirement. You're having issues. All right, well, like 25, 30, 40 years topside, because like you 60 years old, you retire, you live 50 years, you're 110, you an old person, you know what I'm saying? Like, that's ridiculous. But you are living to be like, you know, I mean, 90 and 100 years old now, and this is an issue. Yes, it is. People living longer is a bit of a problem, and it's something that wasn't expected and wasn't foreseen. And on top of that, nobody could have really foreseen what the inflation was going to be. When they set these funds up back in the 50s and 60s, we were still on a gold standard with our money, all right? And we hadn't seen the insane inflation in the 1970s, 80s, 90s, and 2000s that we now see and we now have. So we can't go, oh man, you know what I mean, hindsight's 2020 and shit. You know what I mean? That's because that's really what it is. And hindsight's 2020, so let's not stand here and, you know what I mean, try to blame everybody in the whole world. But let's think about where we are at the moment, and let's prepare, because I'm be honest with you, this is where the collapse is going to come from. It's going to be a bond market collapse. It's going to happen because they have two choices. Either they cannot pay the bondholders or they cannot pay the pensioners. This bullshit, we're going to cut back services on teachers. Like, that's dumb. All right. They're not going to be able to do that because, you know, I mean, you literally have a right to be educated in America. All right. Like, short of actually, like, even if you collapse the education system, like, even if you stop completely paying for it, it doesn't matter. Legitimately, it doesn't fucking matter. You know what I mean? Because even then, like, fucking, you're not going to have anybody paying into the fucking pension fund. You know, and you're not going to be able to collect school taxes. So what are you going to do? That's kind of the deal. You know what I mean? Like, what the fuck are you going to do? Like, you're kind of boned on both sides of this here. So no matter what they do, they can't get out of this. You know what I mean? Like, this is socialism run amok. This is what happens when you want things that we can't pay for. All right? And this is coming. I want y'all to be warned. This is coming. look at your local situation, see what's going on, check it out, see how well your shit's funded. And I mean, I'll leave some links in the descriptions, all the stuff that I'm talking about right now. I want to thank y'all very much. Oh, and make sure that y'all clicking the bell, man, because like they're having people unclick the bell, you know what I mean? Like they're unclicking shit for people and they're unsubscribing individuals from these channels. My views are down 30-40%. Like, it is what it is. You know, I mean, it's not just me. Sticks is having a problem. You know, I mean, a lot of these are Sinatra's having a problem. Gasly's having a problem. Everybody's having a problem right now. They're kind of throttling us. People are, you know, I mean, trying to hit the like button. My last live stream that I did on Thursday, you know, I mean, it was in processing for 4 days. You know what I mean? Like, legitimately. So YouTube's fucking with the channel. Make sure, you know what I mean, y'all are out here, you know what I mean, spreading the word out. Share this link out because YouTube's not going to do it for me. All right, I apologize. I have to ask y'all that, but it is what it is. And if you guys like this information and you like being able to hear about what's really going on in the world, you know what I mean, I suggest that you get this passed out. Thank you. It's very appreciated, man, for your time today. The church will be running. All right, we're going to do the Church of Jesus Christ, another bitch made nigga today. Thank you very much for listening. Peace be like one of my friends. Later.